Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the crypto markets, as we do every week. Post Thanksgiving here, obviously not the best start to the month, but for those who have read what we put out this week, we actually put it on Twitter as well as we usually do. Sometimes we get some feedback, sometimes we don't. This one kind of went viral in the sense that basically all I said was, this is one of the weirdest sell-offs that we've ever had, and there's nobody can explain it. And what's interesting is that, in the course of the thousands of comments and retweets that I got on there, everybody gave me a completely different reason for why we sold off, which in some ways kind of validates the point that nobody really knows why we sold off, and it doesn't really make a whole lot of sense. And we've been doing this for a long time, as you guys know. We've been writing blogs for 8 years now. We've been doing these 20-minute videos for a couple of years now. This is not the first time that crypto markets have sold off in a span of a couple of weeks and a huge move where it didn't really add up. May 2021, probably the most recent example, where if you actually go back into our archives and look at some of the That's Our Two Satoshis that we wrote at the time, we spent 6 weeks through May and June of 21 debunking all of the fears about the market and all of the reasons why it really made no sense that the markets were selling off as hard as they were. So I think it's worth kind of going over what we're seeing that's so bullish and so positive versus what the markets are seeing and where that disconnect really is. And I'll start by saying that the market's been down 7 of the last 8 weeks. Maybe we staged a little bit of a brief rally around Thanksgiving, only to sell off massively on Sunday night before recovering a little bit today. But I guess you can probably point all the way back to October 10th. We spent a lot of time talking about what happened there with Binance, really hurting some of their traders and customers with some depegs happening on USDE and some of the market makers and market neutral funds that got carried out as a result of all the futures liquidations that day. But we're now past that. And if you actually go to what has been driving markets the last month, we're talking December 2nd now. October 10th is a long time ago. If you actually go back now to, what's been driving markets, almost everything has reversed, right? So first and foremost, post October 10th, don't forget equity markets were still fine during that period. Nothing bad was happening in credit markets or anything else. Since then, you had a couple of things that actually riled markets up, right? One was a clogging of the repo market, right? For those unfamiliar, the way banks have to fund themselves in day-to-day operations, they're constantly either posting treasuries for cash or posting cash for treasuries. And that market is called the repo market. And they got clogged, right? There was basically, because of the government shutdown, tax receipts were coming in, payments weren't going out, borrowing needs were higher. And as a result, there was a massive drawdown, which basically was a form of quantitative tightening, right? Or a way of removing liquidity from the system. Well, that's all since reversed, right? The TGA is back to normal levels. There isn't any stress on the repo markets. Liquidity is flooding in. On top of that, the Fed announced that QT was ending on December 1st, which was yesterday, right? So again, you have a massive flood of liquidity entering the markets now that wasn't there 4 weeks ago. So any fears around plumbing or repo markets or liquidity, those have gone away. Then you fast forward to the end of October. You had the FOMC meeting. Chair Powell, even though they cut rates 25 basis points as expected, Chair Powell was very hawkish in his talk, saying that we don't know what's going to happen in December. And if you look at on the CME website, if you look at Fed fund futures, the expectations of a December rate cut went from 95% down to 30% over the course of the next couple of weeks in the first week of November, because everyone's like, oh my, maybe they won't cut rates. We don't know what's happening. Well, that's all completely reversed. We put a chart of this in the blog itself, but expectations for rate cuts are now back up to 90%. A lot of this is because the inflation data continues to come down. What little data we have on the job market is showing that it's a little bit weaker, even though we missed all of October's data because of the government shutdown. But basically, anybody who was saying that the market was selling off because the Fed was no longer going to cut rates, well, that's completely reversed as well. On top of that, you have basically a full kind of regime change over at the Fed that is expected to happen right now. So Trump has already come out saying that we know that he knows exactly who he's going to announce as the Fed chair. If you believe Kalshi or Polymarket markets, people believe that that's going to be Hassett. Hassett is a very renowned bull. He's very pro markets. He's very much in favor of lowering rates. Shout out to Alex Kruger, who I had on last week or a week before, who, if you check out his Twitter, he put out a great piece called 2026, the year of the Fed's regime change. It's talking about all the reasons that Hassett is going to be incredibly dovish and incredibly bullish for markets. So again, all of that has reversed. And guess what? The equity markets have fully reversed as well. So any hiccups in the S&P, S&P is back almost at all-time highs. Any hiccups in the Treasury market, 10-year Treasury still at 410, hasn't moved. The dollar hasn't moved. Gold is back to pretty much the highs. Silver is back at the highs. The VIX is back at the lows. Credit spreads are back at the lows. So basically every other market has seen what I've seen, which is that anything that would have given you pause to this year's rally has subsided. And that there's really no reason for markets not to go back up. Not to mention corporate earnings were the best. Third quarter corporate earnings were great. And we just had, the Thanksgiving shopping period, which showed a pretty robust consumer. So everything that we're looking at in the macro world is telling you to buy risk. On top of it, if you look more crypto specific stuff, well, Vanguard just announced that they were allowing their clients to buy Bitcoin. And as a result, this started today. You're seeing a big move higher in Bitcoin, and you're seeing massive volumes on IBIT and other ETFs. One of the highest trading days ever in IBIT, just because Vanguard and their trillions of dollars of wealth and millions of clients are now able to buy. Bank of America came out recommending a 4% allocation to Bitcoin and crypto. That's the first time Bank of America and Merrill Lynch has allowed clients to do this. Not to mention, all the things coming out of BlackRock and JP Morgan and Goldman and others. The SEC came out today and said we expect to have a crypto exemption in a month or so. The SEC also said that they believe that the market structure bill is going to get passed by the end of the year. And then you have Larry Fink at BlackRock talking about how tokenization today is roughly where the internet was in 1996, and eventually all assets are going to be tokenized. You put it all together, and one by one, any of these fears that were driving markets lower have gone away. And then you have the completely made up, fabricated fears. MicroStrategy, for example. I mean, we've been literally debunking the MicroStrategy fears for what feels like 5 years now. In fact, if you go back to the May 2021 blog that I'm referencing, we had a whole piece on MicroStrategy there as well. Everyone's freaking out about MicroStrategy that they're going to be forced to sell Bitcoin. It's never going to happen. There's no covenants in the debt. The maturities are small. The interest expense is small. All of the equity and preferreds, they don't actually have to pay those dividends on the preferreds if they don't want to. But they also just raised $1.5 billion of cash to give them a 2-year buffer to make sure they do pay those preferreds. So any MicroStrategy risk is ridiculous. You might not want to own MicroStrategy stock. You might not want to own their preferreds, but they're not going to be a forced seller of Bitcoin. There's literally no impetus for them to have to sell Bitcoin at all. So those fears have gone away. Then the Tether FUD came out again. People saying that Tether is going to be insolvent because of their attestation report, where they showed 70% of cash and cash equivalents and 30% of things like Bitcoin, gold, and corporate loans backing Tether. Well, guess what? That's a higher ratio than any bank in the world, right? Banks used to run 30 times levered. Now they're closer to 10 to 15 times levered. But nobody has fully backed 100% cash. You have 100% asset coverage, but not 100% cash. You would need a more than 70% run on Tether at one time for them to all of a sudden have an issue with liquidity. They don't have any solvency issue. They might have a liquidity issue if more than 70% redeems in one day, but that's not going to happen. Don't forget, 6 weeks ago, Tether raised money at a $500 billion valuation and raised $20 billion from large banks and brokerages. Like, nobody's scared of Tether. This is an ex-post reaction to the market going down that people are now coming up with for reasons for why Tether is going to all of a sudden, implode or not be backed. So the point I'm trying to make is you got silver and gold at all-time highs. You have Fed cutting rates. You have earnings growth at the best in years. You have any tariff fears that have basically gone away. You have the largest tax refunds in years expected in 2026. You've got the 10-year still hovering at 4%. You've got credit spreads at pretty much all-time tights. You have a new dovish Fed chair coming in. You've got all kinds of pro tax and income announcements coming in, like no tax on tips and no tax on overtime or Social Security. You've got basically central banks around the world adding liquidity to the market. I don't know what anybody is looking at this point, other than fear itself, because prices are down. It's one of the most bullish setups we've ever seen. So with that in mind, again, I think it's just kind of crazy that we're sitting here again trying to debunk all of these rumors and misinformation that's out there. But it's what we feel is the right thing to do right now, because this is probably one of the biggest disconnects we've ever seen in terms of fear and sentiment and price relative to all of the bullish actions that we see. So, we wrote the blog. We talked about some of the possible explanations for why the market is as low as it is. Some of it definitely comes from a lack of education. Some of it definitely comes from bad assets. Again, how many L1 tokens do we need that have massive inflation and don't do anything? How many meme coins do we need? There's no question that the entire market should not rally because there's a lot of really bad assets out there. But the good assets should come back, because if you're looking to put money to work, all you're thinking about is, do I want to be risk on or risk off? And the market is telling you to be massively risk on. And then the question is, well, what is the right place to put those assets? Is it in equities? Is it in things like robotics and AI? Or is it in high yield credit? Or is it in gold and silver? Or is it in something like crypto? I would think with sentiment at the lows that you would expect crypto to at least bounce back a little bit here. I know a big part of the value proposition of crypto is social, right? We've talked at length about how you need to have financial utility and social value. Financial value being cash flows, utility value being actual usefulness or the ability to spend or use as collateral, and social value, of course, being just is there a cool factor to it? And that social factor is at all-time lows, which is why sentiment is all-time low. So I get that. But what you'd expect then is that the tokens that have a higher percentage of their value coming from financial or utility sources, things like BNB or Hyperliquid or other DeFi tokens like Aave or Jupiter, or platforms like Pump that still makes over $1 million a day and uses that to buy back tokens. Those are the assets that should be outperforming in a market like this when social value is at the lows. And to some extent, you're seeing that, right? You see a day like today, for example, where the market's up 8 to 10%, and some of the ones I just mentioned are the best performers. Pump is up 20%, for example. Hyperliquid's up 15%. You would expect those to be doing better than others, maybe in an environment like this. But you wouldn't expect just complete outright fear and everybody just writing off crypto in an environment like this. So again, read the article when you have some time. I called it the selling that nobody can explain, because it really does make it makes no sense. The market is telling you to be long risk. Everything that you could ask for a bullish setup is here in the market right now. Whether or not crypto is the asset class that people want to buy, or whether or not the individual assets within crypto are the ones people want to buy, that remains to be seen. But certainly we did our best to debunk some of the fears that are out there in the market this week. So with that, we'll see if this rally can continue. We'll see if there's any actual follow through or legs to crypto after a pretty tumultuous last 6 weeks. But I will remind people that in May and June of 21, it took about 6 weeks as well, which is right about where we're at right now. And then we were off to the races from July through December of that year. So we'll see if that happens. Check out the blog, give us any feedback, and we'll be back again next week with more information. So appreciate it. That's our 2 Satoshis for this week. We'll see you next week. Thanks, everyone.